Blockchain is basically just a new way to store information. It was first invented to support the digital cryptocurrency Bitcoin, but people started getting a lot more excited about this underlying technology, and in financial markets at least, they started to see that it could be applied to many different areas. So we've seen even new cryptocurrencies, and other financial institutions are looking into how to apply it to storing data repositories, to trading stocks and bonds, and other very exciting applications. When we talk about blockchain as a new way to store information, what we're really saying is that it lets us create a new, more secure database. So why do we care? Why do we have databases in the first place? Well, in financial markets, at least, what it allows us to do is store ownership of the information about the ownership of assets. There are several aspects to this, and so we'll take them step by step. The first thing that has to happen is we have to check that she actually has $25 in her account. So we look back through past transactions in the blockchain to see that at some point somebody gave her $25 and that she has not, since getting that $25, spent it. Once we confirm that, we say, okay, go ahead, let's start this transaction. Once that transaction gets submitted, a whole bunch of other transactions could also get submitted between other people in the network, and then we collect those transactions into what is known as a block. Once we have a block, what we call a consensus mechanism kicks in that will approve the transaction and add it to the blockchain. There are two broad categories of consensus mechanisms. There are permissioned and permissionless. So the permissionless consensus mechanism is what we see in the Bitcoin blockchain, though there are many other implementations of this. And the advantage of a permissionless system is you don't need any figure of authority. Everyone in the network works together to confirm the transaction. So we won't get into the specific details, but basically what happens, at least in the Bitcoin blockchain, is different participants in the network race to confirm that the transaction is true. And the incentives are set up such that you actually get more out of confirming a true transaction than submitting a fraudulent transaction. So the incentives in the network make it so that everybody is kind of pulling the same way in favor of the integrity of the entire system. Once that permissionless consensus mechanism confirms a block is true, it gets added to the chain, and we're ready for a whole new round of transactions. A permissioned consensus mechanism is fairly similar with one key difference. There actually is a figure of authority. And so rather than having everyone participating or randomly chosen members participating in confirming a transaction, it's the select few who everybody in the network has decided to trust that get to confirm the transaction. And so again, they see the transaction, they confirm it. Once they do, the block of transactions gets added to the chain, and we move forward ready for a new round. There tends to just be one master copy. So if you are not the person holding that master copy, you have to always ask for information to make sure that what you are storing on your local server is in fact correct. They're often easy to tamper with or not as secure as people would like them to be, and it's often difficult to reconcile changes made kind of on the periphery of the network with the actual master copy. So a blockchain database solves a lot of these problems. Everybody who has a copy of the database has the master copy. So when they look at their copy, they know that what they're seeing is an accurate reflection of everybody's assets. So there are a lot of ideas floating around here, and there's a whole lot more to blockchain than we've had time to explain here. So if any of this piqued your interest, I, along with my co-authors, John McPartland and Rajiv Ranjan, have just put together a primer on blockchain, what it can do, and where we think it's going in the future. We hope you find it helpful.